I have to ask you, Jeff, like, how can Bitcoin help exactly in this scenario? I know you've thought about this before, but in the framework of thinking about the IMF and these countries and all of this debt that's never going to get paid back, how can Bitcoin help exactly?
So let me start with just kind of reinforcing what Alex just said.
Okay.
So when people look at to run their EVs and electrification of this, they should look at the only way that works is the cobalt miners in Africa getting paid $1 a day. And so when they see that mine that looks exactly like that, when they hear somebody say we need to promote green energy, they need to look at that mine and they say, is this a fair way to run the world's labor? Is this fair that we're able to extract this toll on other people? Because that's the cost. Well, it might be hidden from you, but that is the cost of the economic system that we live in. And it's not just cobalt, it's every single thing because they around the world, because it doesn't work unless it looks like that. Now, also, if you add that system now actually removes the ability for the U.S. for kind of their military industrial complex. Because what it means, just the economic value alone, it means you have to outsource everything. There is no way people will bring stuff into the U.S. with $1 being worth way more than it is elsewhere. And what Alex just said, so I actually think what's happening around at a higher level than the monetary level that we hear about at the Fed, what we hear about in the politicians, is what's really happening is the national security complex of the U.S. realizes that they need to reshore labor, and that means a lower U.S. dollar, and it's impossible to have a lower U.S. dollar with every other nation pegging to your U.S. dollar. Essentially, China's using that strategy to exploit the strategy, and if the U.S. allows them, China will be dominant, and then it'll look like then it'll expand on the same essentially paradigm that we just had. I suspect that is nobody's going to let that happen. There is not going to be another reserve currency like the U.S. ever. So what's actually happening is, and this is why this is so hard to see, is just about everything we measure is inside the system. And we have a new system, a parallel system being developed beside it.
Just to pause you, Jeff, do you mean that like when China, for example, earns dollars for all that stuff, it then just swaps that into, for example, like rare earths or energy or food, hard assets?
Exactly. They're essentially using the political will of the U.S. to be able to print, to be able to peg to a cheaper dollar, keep their labor rate low while to attack driving these assets, and then building Belt and Road in China.
Because without the dollar consumers buying their stuff, they may not have the same market, and they may not have the same ability to go get those rare earths or oil or whatever.
Their debt, which there's never been a country created more debt to GDP faster than China.
Yeah.
You want the biggest debt bomb in the world and terrible demographics. Their debt collapses immediately without those consumers. Yeah. So I suspect at a bigger play, what's happening here is the game between the Fed and everything else, and the backdoor operations between the Fed and which banks they want to save, is actually the national security complex saying how much pain can we inflict on the U.S. and keep independence of the Fed, because the alternative is China wins. That's and so well and so that's just the game within the game. What's happening if we go back to Bitcoin and why that's so important, and why it would be hard to see from within the system, is everybody's looking for. You've probably heard me say this a million times, but which snowflake causes the avalanche, right? And lots of snowflakes all over the place, and everybody's saying, "Oh no, this is it, this is it, this is it." And you cannot measure a a nonlinear system like that. Works more like chaos theory. And what's happening is Bitcoin is repricing that entire system, but from the outside in. So, and what that transition is going to look like is a slow transition with lots of events inside. So if you're pricing from the existing world, and let's say in Argentina, there's only 5% of people on Bitcoin, 95% inside a system that has 110% inflation rate. In other words, in 110% inflation rate is a deflation of their labor. It's wage deflation by that amount. So essentially, everybody there has gotten a massive pay decrease versus the world.
They're getting squeezed.
Yes,
and
totally.
and that means U.S. gets to extract more of their labor, and
Exactly.
Egypt and everyone else, and 95% of them stay,
Yeah.
and to do it all over again.
Yeah.
Right. And then they think in the short term, wow, okay, now investment and capital is moving in here, and I'm going to get rug pulled again and again and again. So the rest of the entire economic system looks like that, and they're going to get rug pulled again and again and again, as $400 trillion of global debt goes away,
Yeah.
in whatever terms you want. It could go away through collapse. It could go away through hyperinflation. It likely won't be hyperinflation in the U.S., but it'll go away in a whole bunch of different ways as Bitcoin starts to move people over. Because in Bitcoin, you could simplify this really easily. And I said this on Peter McCormack's podcast, but it's well known in economics. Prices fall to the marginal cost of production, no matter what. Over a long enough time horizon, prices fall to the marginal cost of production. It's why the air that you're breathing right now is free. It's why your calculator app is free. It's why this video that we're using right now is free. Because as more and more entrepreneurs try to create value on something like that, there's a penny left in profit, they will attack it. And then it goes to free, and the entrepreneurs go to the next thing. You can regulate an industry to slow that down, but it's still attacked from somewhere else in the world. And over time, prices fall to the marginal cost of production. You could just say that, period, exclamation mark. So, but the only thing that could measure that phenomenon is something that was outside the system of debt. So what's happening in Bitcoin is what you're experiencing Bitcoin, why 5 years ago it would have cost 100 Bitcoin to buy a house, and now it costs 10 Bitcoin to buy a house. And that'll continue to fall as all prices relative to Bitcoin will fall forever. But most people will measure those prices through whatever currency is being manipulated, and they'll continue to be confused about what's happening. Essentially, Bitcoin is repricing that entire debt stack.